So we've talked about my portfolio size and how I'm structuring it and how Arnie has his. What about yours, Kris? Is it a a lot of stocks? Is it more condensed? What do you feel comfortable with, and what are you running with right now, and kind of your plan for investing?
So I have probably 20% of my and my wife's money in Palantir. 50% is in different indexes. I have a short position on the market right now. So right now I was I so I do trade a little bit here and there, but I only trade using indexes, right? With companies, I like DCAing. I realize that the temperament that my own personal temperament is that I look too much into things and not enough in things. And if a company makes one move, I'm like, oh my God, is that going to be net positive? Is it not going to be net positive? Blah, blah, blah. So it's much harder for me to trade up and down with companies. So I don't do it. Now with indexes, it's much easier to do because I think indexes are more beholden to macro trends.
Mhm.
So you can make better predictions, easier predictions. So as an example, right now you've got the tech sector overall beaten down a lot, right? Now the question is, how much further do we have to go in terms of tech? Like, do I believe that growth companies are going to make a comeback, and the current valuation on average, is it worth it? So right now, I would say for me, I'm looking at TQQQ, which is the triple leverage QQQ fund, and SQQQ, which is the short fund, short version of it. So when the TQQ dropped to like 20, around like 21, $22, I saw that there was probably going to be some level of a bear market rally. So what I ended up doing was just selling some puts into it. And I was able to capitalize on that. And as the price went up, I sold in the money calls, which, believe it or not, got called out this week. And I was able to make
Yeah,
some
so
money off of it.
that's what I was
Yeah.
going to ask you was let's
Yeah.
talk about this. Is we just had a week, the first like real positive week from the macro in the indexes, especially in the Nasdaq. Arnie, do you think that this is a continued rally for quite some time, or do you think this is a trap?
Mm, I would say the potential of a cliff is there, but what I would say is that right now the institutional investors are skewed extremely negatively. So they're super conservative, and once they are positioned like that, in my opinion, is much riskier to stay out than stay in. My
Point.
investment approach right now is I want Palantir to be like not only my biggest position, but I could potentially YOLO on it. But to get there, I want a crazy price. And with crazy price, I say like 5, something like that. I don't know if it will go there, but if it will not go there, I will be in with a recovery. If things go worse from here, let's say something bad happens on macro and the growth stocks are sold, regardless if they do it right or do it wrong, I see that more as an opportunity, because the idea is Apple basically moves like the market, while Palantir is considered a high beta stock, would get hammered. And that would be the opportunity to say, okay, I sell a chunk of Apple and I go even heavier on Palantir. This is how I did. I started Palantir at DPO at around 10, then I did nothing until it went again at 10 when Russia invaded. I added. Then at the minus 20% after the earnings, I doubled down, tripled down, and became 30%
You've been very
position.
patient about timing the stock.
I got practice last year with Baba. I made a huge mistake because on the fundamental level, already when I bought heavily, I mean 30% of a portfolio, while 70% was Apple. The price was incredibly good, but as we said before, I completely underestimated how further the government would have gone persecuting these companies. At a fundamental level, like nothing really happened. There was a some slowdown now. They needed to invest in capex, but the company is incredibly healthy. But the price got hammered. So that was my mistake of perception. I went too far on something that I didn't knew enough. And I realized, okay, If my primary motivation of taking a position is because it's cheap, chances are it can go cheaper, and it could become a value trap, because this is something I see often on Twitter. Hey, Micron has a PE of 5, Intel has a PE of 10. PE is worthless if you don't understand the dynamics behind, and you're not sure that the company will produce earnings and will growing earnings in every environment. While on Palantir, I'm confident because I've studied the company long enough to know, okay, if something bad really happens, the company produces free cash flow a lot. There are recurring revenues that can protect from bad things to happen. Even a recession, I shared an article today showing that Salesforce, ServiceNow grew like ServiceNow was young and made 80x, 50x the revenues in those 5 years. So Salesforce went from 500 million revenues to 1 billion and 5, all during 2007, 2008 till 2011. So the business structure of Palantir is the worst that can happen is we don't grow any longer.
So but your article made me think of several things this morning. It was very well written. I encourage everyone to go subscribe to your Substack. Check out Arnie's tweet with it.
Thank you.
It was very well written, and it made me reflect on some of the things that I've had to learn. I've learned so many learning lessons this past year in investing that I never maybe considered or thought would happen. Like to your point of, if something's like a great price, like surely it can't. I never thought Palantir was going to get below $10, right? And when it was at like 24, right? We were all so happy and bullish, and still bullish, right? And based on the thesis. But one of the things that your article made me think about was the learning lessons at the macro matters. Like, so often when you look at 2020 and maybe going to 2021, people really weren't talking about the macro, or even people were just talking about, you know, these smaller companies, Upstart, Matterport, you know, the list goes on and on. Everyone had their favorite that was just blowing up and doubling in size overnight, which is not the norm at all. Fundamentally, we can agree that should not happen. That should have been the red flag for me, is like when my whole portfolio doubled within a very short amount of time, should have taken some profits and understood that it was not normal, and then go back to what, you know, expectations, right? What are your expectations? For me, I just want to beat the market and retire at a reasonable age. Retirement doesn't mean me not working, but I just want to be financially independent. And I never really looked at the macro until now. This year, the macro has made me realize, no matter, and your article talked about this, even when ServiceNow was killing it in Salesforce during the time right before the 2008 crash and continuing to compound revenues exponentially, the market didn't care. You're part of growth, you're going down, deal with it. And so I would love your guys's thought process now that we're literally in the middle of this recession, because it really is, even by definition. I think when the GDP results get announced, how are you guys, let's say we stay in this state of mind in the market for another 12 months before anything gets better. How are you guys looking at adding to positions, or maybe not, maybe staying more in cash? But just curious of how you're handling it, because I think with people hearing stuff, videos like this, it gets them to think about how they want to handle it. So I'd love to hear your guys' both approach.
For me, I'm just I'm DCing into indexing right now. So basically,
to add. Okay.
Yeah. So I'm adding, but I'm doing it very slowly and methodically. So this way you end up getting, if you ever go to Vegas, you know, there's a martingale system. So basically every time you invest and you go down, you just put more money in, and then eventually you become, you know, you'll get to a point where you've become really profitable. So right now, I think growth is taking a significant beating. It's down 20 something percent, but it was a justified 20%. It could go down another 20%. So the worst thing you could do is go right into an index and be like, oh yeah, let me just buy use all my money, go buy that index. No, there could be a chance that you see some further downside. So the opportunity to miss out on gains is there, but there's also an opportunity to miss out on some losses. So how do you mitigate that? And the easiest way is by just dollar cost averaging. And for me, it's also, I do options too. So anytime I go into it, I also sell covered positions so that this way it provides me some downside protection also. So right now, from the index perspective, I'm slowly DCAing into, well, I've always had my Palantir DCA, regardless whether, like I said to you guys, regardless of how, yeah, exactly. I saw that. Thanks, Arnie. That was hilarious. Kris Patel, the soldier, DCAing into Palantir. I made my mind up. No matter what happens, my DCA position in Palantir will not change for the next 10 years.
So now let's talk about that though, because DCAing, there's different ways to do it. Dollar cost averaging. When you do it, are you setting your buy just every 2-4 weeks? I don't care what the price is I'm buying, or are you looking for a specific price target that you feel comfortable with?
No, just every week. I have about $250 right now that I have in one of my portfolios that just goes right into Palantir. I don't look at the price. I'm just like, here's the fixed dollar amount. It's going to get invested, and that's been good because when things have come down, I thought about maybe I should buy, instead of doing 250, I should do 500. But then I'm like, no, but what if it goes down further? So it's a mindset that I have that right now I know that if I were to buy a significant portion of Palantir, what would end up happening to me is that I could not sleep at night because I'd be like worried about it all the time, right? My mentality is protected right now. So every time Palantir goes higher, I celebrate thinking, wow, look, my stock is up today. Yay, I'm happy. And every time it goes down, I also celebrate because I'm like, man, I'm going to get some cheap shares this week. Yay, I'm happy. So now I sleep comfortably, right? And that's the point of investing. You have to come up with methodologies that are going to support your way of doing things where you're happy about it, or which will keep you comfortable. So it's not only enough to have a thesis behind it, but also to have an investing strategy that supports that thesis, So for me right now, I know Palantir is a risky play. So DCA is probably better than going into a much larger position. And then I have a significant portion in just an index that I know I'm not going to touch. It's in a retirement fund. It's going to be that money I don't need for the next 30 years. I don't really care. Keep that money in there. And, that's one of those things that I don't look at.
So